Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Mr. Daniel Yu, Global Strategist at Yuanta Securities. Mr. Yu, good afternoon. Thank you for making time today.
Good afternoon.
Well, let's start with the markets, and in the U.S. overnight we saw a big decline in the main indices on concerns about Omicron and also the uncertainty perhaps around the Biden administration's spending bill. The S&P down more than 1.1% and the Nasdaq about 1.25%. What's the story in the global markets?
Yes, as you said, Wall Street pretty much fell sharply on Monday as investors dumped the travel stocks, the big tech and other gold shares because of the concerns about the rapid spread of the Omicron variant of the coronavirus, and also its implication of the global economic recovery overall. Also, there's been a concern about the U.S. Senator Joe Manchin said that he would not support the President Biden's $1.9 trillion Build Back Better Act, which means that could be a negative news for the economic recovery for U.S. And also, if you look at the several countries in Europe, they have announced that they will impose movement restriction because of this Omicron variant. And also, U.S. has reported that there's been more than 126 cases of these Omicron on Saturday. So all in all, this has resulted into a sharp drop of the U.S. equity market. And that also triggered most of the other global equity market to fall yesterday because of some of the news that coming through from Asia as well, with the China lowering the interest rate. That did not help because people were concerned about the slowdown of the Chinese economy. So all in all, yesterday, pretty much the negative news kind of fell through. But today, if you look at the Asian market, it is recovering somewhat. And also, if you look at the U.S. futures market, it is going up by fairly reasonable, a good number. Nasdaq is actually up more than 1% on the futures. The reason for that is because even though there's been concern about these various issues, most of people are expecting that U.S. economy is resilient and that they will recover and show reasonably well above 3% growth rate year on year next year. After rising by more than 5.5% this year. So we think that the economy is fairly stable. Yes, there's a concern about the inflation pressure, but that's something that we have to watch and see. If the fiscal policy doesn't go through aggressively, then there's a possibility that rate hike might not be happening as aggressive as expected of 3 times next year. So I think that people are just watching and see, wait and see how things play out. I think that the earnings numbers that are coming through for the fourth quarter, which will be coming in the January, mid-January, those are the ones that we have to watch out for in terms of a long-term trend.
Right, and Korean shares getting a bit of a lift today after yesterday's big decline, perhaps some bargain hunting there. Some games companies doing well today. We've also seen the exchange rate, though, rise back into the 1190s. Tell us about the domestic market.
Yes, Korean market have recovered somewhat after sharply falling yesterday. Today, Kospi is up about 0.46%, still below 3,000 territories. This is due to because of the foreign investors coming back to the equity market, about 55 billion won worth, but the institutional investors are the one that really raising the overall market, net purchasing 333 billion won worth of so. Also, if you look at Nasdaq, it's up about 0.59%. The same case where the foreign investors are the major retail investors are major sellers, while the foreign investors bought 79 billion, and also overall institutions net bought about 245 billion. I think that people are concerned about the overall product price PPI numbers. Korea has shown 9.6% year-on-year growth in November, which is highest number since October of 2008. Clearly, that is negative news for the operating profit margins for Korean companies, and that has resulted into uncertainties. Also, if we are worried about the global growth rate recovery from U.S. as well as China, Korea will be highly affected because Korea is the biggest exporter of those two countries. So right now, people are quite uncertain at this point in time. People were hoping for Santa rally, but I guess the numbers-wise, there's a bit of uncertainties. However, though, we think that Korea's economic condition is reasonably good, that they will show reasonable growth rate next year. So therefore, this is just something that we need to take time for the recovery to happen, not necessarily it is the beginning of the downward trend of the equity market. So we'll wait and see how things play out over the next several months.
Well, if we could look at oil prices for a minute, they've come down a lot since the emergence of the Omicron variant, with some countries locking down again, hitting demand. What's happening with oil, and what's your outlook for it?
Yes, yesterday, because of all these concern about the COVID cases affecting globally, and also U.S., the bill might not be passing through, all that has resulted into uncertainty about the growth rate of economic recovery. And that has resulted into oil price sharply declining as low as below $67, falling sharply. However, it seems that it is stabilizing somewhat above $69 per barrel on Tuesday. Yes, there are concerns about these COVID variant and also the U.S. Fiscal policy bills, but overall, if you look at the unemployment ratios and also the salary growth for U.S., we think that is quite reasonably good number coming through. So therefore, overconsumption should be sustained in a reasonable number, despite there are concern about the inflationary pressures and all these factors. So if that's the case, we think that the supply-demand picture of the oil would result into fairly reasonably bound, range-bound trading. We've been saying that oil should be somewhere between $65 to $75 per barrel on a range bound over the next 6 months or so. Yes, economy is recovering, but not to the extreme speed. Also, in terms of the supply increases, it is a very reasonably steady number. So therefore, we think that the supply and demand picture is in a good position where the oil price should be sustained at around $70 per barrel in the future.
Well, finally, Mr. Yu, data show that Korea's exports so far this month are up 20% compared to a year ago, despite the new variant. Semiconductor shipments up more than 27%, steel almost 40%, petrochemicals almost 90%. Tell us about this data. What stands out to you?
Yes, definitely this is quite outstanding number. First 20 days of December, if you look at the export, it has grown by 20% year on year. If you look at the country's outbound shipment, it stood at 36.9 billion over the first 20 days, relatively compared to 30.7 billion a year earlier, according to the Korea Customs Service. Also, import jumped significantly by 42.1% on a year to 39.6 billion, resulting in a trade deficit of 2.66 billion. As the data showed. In terms of by the sector, outbound shipment of memory chips, the key export item, has risen by 27.5%. Semiconductor accounts for around 20% of export for South Korea. Pretty much, Samsung Electronics is as you know, the largest memory chip maker. Also, Hynix is doing reasonably well with these export numbers. Also, you have mentioned that export of petroleum products jumped 88.8% as the oil price remained extremely high amid the global economic recoveries. If you look at shipment for autos, it declined by about 4.1% because of the shortage of the automotive chips. The supply constraint is continuing to be happening. And automobile accounts for about 7% of South Korea's export. Also, by the country, the shipment to China, South Korea's large trading partner, rose by 22.5% on year. That is the main reason why Korea's numbers are looking good. Also, as I said, U.S. and China are the biggest parties Korea exports, and the U.S. export rose by 19.4%. So far, the numbers are saying that the slowdown is not necessarily happening. I guess people are concerned about the Omicron issues, where it will affect the end of December numbers and the January numbers. If that's the case, then these numbers might be relatively less than what we've seen this month so far. But all in all, we think that economic growth rate of U.S. and China should be fairly reasonably stable with all the policies that are coming through. So therefore, Korea's fundamentals should not be deteriorating that much next year. It should be a reasonably good number so that we can try to add equity exposure for Korea.
Got it. All right, Mr. Yu, we'll have to leave it there for today. Thank you, as always, for sharing your insights with us. We appreciate it.
Thank you very much.